Hey guys, TommyBryson here, and the stock market is one of the only places where the average person, like you and I, don't have to be wealthy or anything whatsoever, is able to own a piece of the biggest companies out there in America or around the world. And all you need is just this, right? $1. For most companies out there, you're able to just invest with $1. You don't need 10,000, you don't need $100,000, you don't need any of that stuff. Just $1 would do. And as long as you make pretty good investments, you're going to make money. If you make bad investments, you're going to lose money. And sometimes you might lose all of your money. And it sounds like a gamble when you say it like that, like Squid Games, but in reality, it's not a gamble. You know, when you go to Las Vegas, guess what? The odds are not in your favor the minute you step in. So no matter how smart you are, you're probably not gonna do well. Like, not at all. And I'm willing to gamble that you probably will not do well, okay? However, the stock market is a place where it's not a gamble, right? Because you're investing into individual companies or gold or oil or water or real estate or whatever you want to invest money into. But as long as you understand it and you understand the value, you're able to make a lot of money. You can turn this into this, right? That's the cool thing about the stock market. And today, I'm gonna teach you or tell you about 3 things that you need to know when it comes to being a stock market investor or just an investor overall. And these 3 things, although simple, help me out a lot. And that's why I wanna share with you guys today. Now, if you guys are new here, I post videos on YouTube 3 times a week on finance and money and credit and all that stuff. So make sure to go ahead and subscribe to the channel and hit the bell so you're notified. On top of that, also destroy the like button because it does help a lot with the channel. So thank you guys so much. Now, the very first thing is, guys, number 1 is if you want to be a successful investor and not just have $1 and turn this into nothing, like you just lost it, you want to make sure you eliminate the short-term mindset. Now, what is it? Obviously, it's you trying to make this turn into this as fast as possible, no matter the risk that you're actually going to take, okay? It's taking a bunch of risks to try to get rich as fast as possible. And we all know someone out there that is always up to something, you know, kind of like Ed and Eddie, if you remember that cartoon from the 90s, but it's like that, right? You always have like somebody trying to get rich very quick and always has a scheme up their sleeve. But in reality, it's very risky. And I'm gonna tell you why this short-term mindset doesn't work, for example, in the stock market. Now, here are 3 reasons why more than often, the short-term mindset is actually going to make you lose most of your money, if not all of your money. The first thing is, guys, okay, numbers don't lie unless manipulated by us, okay? So I wanna give you 2 examples here. Warren Buffett and the S&P 500. And by the way, if you don't know what that is an index to track the performance of the stock market. How? It contains the 500 largest companies in there, and seeing that performance is gonna tell you overall, with a little accuracy, around what the stock market is actually gonna do on average, okay? That's all it is. It's just an index for performance for the stock market, okay? So meaning, when I say short-term mentality, what does it mean? It means you're trying to turn $1 or, for example, 10,000 into 20,000. You're trying to double your money, triple your money, maybe 10 times your money, right? 10x. You guys know about that? The 10x thing? Yeah. You're trying to do something very quickly, very fast, no matter the risk. You're just trying to get it done. However, the stock market is very precise. And we have a lot of data to kind of track exactly what on average you're expected to actually make. So for example, if I invested since 1965, and by the way, I was not born 56 years ago, you know, if I invested some money, my average return in the S&P 500, which basically contains the 500 largest companies, would be somewhere around 10.33%. By the way, feel free to double check everything I'm saying, but I have screenshots to prove it. I got my receipts, okay? But overall, I can expect to make 10.33% by just buying that index that contains those 500 companies, putting my money in there and forgetting about it. However, Warren Buffett, the best investor in history, in my opinion, has been able to double that, okay? So usually, an average, in the past 56 years, he's managed to make around 20% on his money, okay? That's double what basically the S&P has actually done. And today, he's worth around $100 billion. Now, I say this to say this, okay, guys? How is it possible that Warren Buffett, the best ever, okay, is only able to basically get 20%, but you're trying to turn 10,000 into 20,000? You're trying to double your money while the best investor can only make 20%. It just doesn't seem really that fit, okay? And by the way, when you think about this, you might say, well, 20% is not that much money. 10% is not that much money. So for perspective here, if you invested $10,000 with Warren Buffett back in 1965, you would have had today, at a 20% return, you would have had $271 million. Yeah, a lot of money. So this turns into $271 million. That's crazy, right? And, you know, if you made 10% or 10.33%, well, this right here, this 10,000 would have only turned into $2.4 million, okay? It's a lot of money, but it's not as much as 271 million. And that leads me to talk about my second point, which is basically compound interest and why this short-term mindset is not gonna work. So for example, if I have $100 invested and I make 20%, well, I made $20. Now, next year, if I make 20% again, I'm not gonna make $20. This time, because I have 100 plus 20, next time next year, 20% of this is going to be around $22, which basically means every single year is going to compound and make me more money. Now, this obviously needs a lot of time to actually make it work. So remember that example with Warren Buffett, and if I invested 10K, it would have turned into 271 million over 56 years at 20%. Well, if I remove, I don't know, like 26 years and make it only 30 years, I would only have around $2.3 million. That's how crazy this is, okay? So 30 years, the same 10K only makes me 2.3 million. 56 years, that same 10K turns into 271 million. And now you know, if Warren started in his 20s and he's 91 years old today, he has all this time to compound his money over and over again to basically amount to what he has today. But if all you want is short-term money, you won't allow compound interest to do its trick. And again, 10% is still going to make you a few $1 million if you're investing a good amount of money. Now, my third point is FOMO, okay? Because this short-term mindset leads more than often, basically, you and me and everyone out there that, you know, to make 20% is very hard. To find those investments is going to be very hard. So you're going to basically go ahead and try to invest into things that are going to be very high risk, like I mentioned before, whether it's into crypto, into NFTs, into Bitcoin, into a company you don't understand, but everyone's talking about it. And it leads you to say, hey, if I don't put my money into this, it could be the next Microsoft, Apple, or Tesla. And that leads to FOMO. FOMO means fear of missing out. And when you feel that feeling, it's like saying, well, if I don't put my money into this, what happens if it does make money and I don't make it, right? It kind of sucks. So my advice is always, overall conclusion here, okay? My advice is when it comes to having a short-term mindset, most people, what do you want? You want passive income. You want your money to earn you more money. Not, 20% is nearly impossible for the average person. I'm just gonna be honest here. But if you wanna make, for example, $10, 10% of your money every single year passively, just put your money into some index funds and you invest the money that you're not going to need for the next 10, 20, 30 years. And that's going to allow your money to keep growing and growing and growing. So when you are ready to retire, you have all that money right there at your disposal. But in reality, whether there's the next big thing or not, the goal is to make sure that you're gonna have money and you're gonna be taken care of and you're gonna have passive income. So my advice is just invest into index funds if you're not willing to put in the work to study companies and truly understand what investing actually is. And by the way, I do index fund investing to make passive income. That's what I usually do around 80% of the time. Well, right now, like around 100% of the time, but I will be doing stock picking later on. But for right now, 100% of all my money is put into just index funds. And I make like around $33,000 a year just by doing that. So not that bad at all. Now, the second thing, guys, number 2 is when it comes to investing, your tools for the job are going to be money. So no money, it means you can't do a job. It's like a carpenter or a plumber coming to your house with no tools and saying like, okay, let's get the job done. You're like, where are your tools? You can't do anything, okay? Same thing with an investor. As an investor, your tools, whether you're a passive investor or an active investor, is going to be money. By the way, passive, index fund investor, active, picking stocks and so on, okay? That's the difference right there. But overall, you need money in order to make money. It's just true. I know today, right? Yes, you're able to invest with $1. Yes, the earlier you start, the better it's going to be. But no, just investing $1 is not going to make you rich. No, just investing, for example, your spare change is not going to make you rich after you're done spending money. No, just because you stop buying, for example, Starbucks, and you say, for example, $2.74 a day, it doesn't mean you're going to be rich 30 years from now, okay? And by the way, respectively, if you invested $2.74 per day, that's $1,000 every single year for 30 years, okay? You're gonna have around $180,000 invested at a 10% return. However, the problem is because of inflation, that $180,000 30 years from now is only gonna be worth around $85,000. And last time I checked, you can't live off of $85,000, okay? So what do you do, okay? If you need money to invest, but you just don't have enough money, what do? The answer is, honestly, I'm being serious here. The answer is you have to be intentional about investing. If you spend money first and then invest, you're never going to have money for investing. But if you invest first and then spend your money, you're always going to have money for investing, and you'll find a way to manage or lower your expenses. It's just the truth here. So my little rule is this, okay? Invest between 10 to 20% of your income. And that way, you're able to invest a good chunk of your money to actually make a difference. Not just, hey, $1 every now and then, or just a few $100s every now and then. No, be intentional about it and do it automatically. You know, so for example, the average person in the US, I know I love numbers. The average person in the US makes around $56,000 a year, right? Well, if you invested 10% of that, that's $5,600. Now, if you made 10% on that over 30 years, you would have somewhere around $1 million. So that's a lot better than having just $180,000, right? So once you are intentional, you're going to make a massive difference. And by the way, if you put that money into a Roth IRA, you're going to have all that money for yourself when the time comes. You won't pay any taxes on it whatsoever because you already paid the taxes when you were actually young and basically invested the money. Okay, so Roth IRA, $5,600 every single year, $1 million, not that bad if you ask me when it comes for retirement. And that's just 10%. Imagine if you did 15%. Or 20%, it would be a massive, massive, massive difference, okay? And yes, the earlier you start, the better it is. And if all you have is $1, well, you better invest 10 cents of it, okay? Just do that. Invest now and don't wait till later. Now, number 3, guys, the third thing here, and by the way, if you made it all the way to this part of this video, thank you for watching, and leave a like and comment down below. Let me know that you actually made it to this part, because number 3 is one of the most important ones, okay? And it's very basic and simple. And it's basically, don't be a bad investor. That's mostly it. And it basically means, you know, most of you guys watching this video, around 80% of you most likely, are going to be just fine investing into an index fund, having that money grow passively, and not worrying about it. And whose advice is that? It's Warren Buffett. He says most people should just do that and they'll be fine. Making 10% is awesome, okay? However, for the other 20% of you that actually wants to be, for example, a stock picker, that wants to be the next Warren Buffett, what do I have to tell you? The answer is, you know, being an investor, it's not fair. I'll just say that, okay? And here's why it's not fair. Because the average investor is not like, hey, Warren Buffett made 100 billion, so if you're the average, you'll make, for example, 1 billion. It's not that at all. Or for example, if he made 20%, the average investor's gonna make like 11%. No, it's not that at all. You know, the average, when it comes to investing, it's very bad. And that's why this game is so hard. So for example, okay, again, you know, over 56 years, the S&P 500 made around 10%, okay? Now, can you guess how much the average investor actually makes by picking stocks and so on? They make around 2.9%, okay? Meaning, putting my money into an index fund, leaving it there, not touching it, ignoring it, and just investing frequently is gonna make me 10%. But me actually trying is gonna make me 2.9%, okay? That's how crazy this game actually is. So in this game, you don't wanna be average. And by the way, the average person, let's be honest, is just gambling, is just picking things, is just following the crowd. That's not what you wanna be, but that's the average person. So what's my advice when it comes to being a stock picker? If you do wanna become a legit investor? Well, there are 5 things that you actually need to know. I don't know why I said 3 because this whole video is about 3 things, but I keep getting confused. But the 5 things are basically, you need to learn about accounting skills. Accounting is the investment language. It's going to allow you to understand the economical health of a company by analyzing their financial statements. Finance skills. Finance is going to allow you to project into the future how this company is actually going to do. Because remember, you're buying a company for X amount of money, but you want to predict how much growth it's actually going to have over the next 5-10 years based on the history you actually have. That's finance. Then you also need time to allow compound interest to work its magic. And then number 4, I don't know what's going on with my numbers, guys, today. Today, I'm just not good at numbers. Number 4 is you need to have controlled emotions. It means that if you bought a company for X amount and you know its true value, but the stock market crashed by 30%, it doesn't mean you're at risk. It just means there's volatility. Volatility does not equal risk. So you have to be able to control your emotions and say, hey, this is still a good stock, still a good business. I'm going to go ahead and buy more. That takes a lot of work, okay? A lot of work to control your emotions. It's an amazing thing, but it's learned, okay? You can learn how to do it no matter what. Then the last thing, number 5, is you have to have conviction in your decisions, right? So Warren Buffett has extreme conviction, meaning that during the tech bubbles, during the bio stocks, during all the fads that come and go, cryptocurrency, whatever it is, he stays still. He's like, I know my area of expertise. I'm going to stick to this, and I'm going to have conviction based on what I'm going to do and what I know how to do. And that's the idea. You have to know what your strengths are and stay away from what you don't understand. Remember, there are over 4,000 companies just in the US stock market alone, meaning you have to analyze all those companies. You won't be able to. So what do? You pick different industries, whether it's the tech industry, whether it's the car industry, whether it's the retail industry, whatever it is, and you focus on that and become an expert at that, whether it's banking, whatever it is, okay? That's what Warren Buffett does. He's niched down to what he actually is a competent person at. But you put him, for example, in a different company, he won't know what to do with it. He won't know how to value it. It's just that simple. You just can't know everything. It's just the way the world is, okay? But guys, overall, these are 3 things if you want to be a good investor. So remember, it's not short term, it's long term. Remember also, you do need money to get started. Money is going to be your tools as an investor, and be intentional. And then lastly, don't be a bad investor. Do your research, learn the skills you actually need, and devour every single book out there if you're going to be, for example, a stock picker. Remember, the average person, investor, only makes 2.9%. The numbers are there. Numbers don't lie. While inflation is around like 2-3% now because of like the whole money they've been printing. So it's like you're investing money and you're not making anything whatsoever. So is it really worth it? The answer is no. So you got to be better than average. That's the game we're playing when you sign up to be a stock picker. I'll see you guys next time. Comment down below. Let me know if you want more videos on the stock market. And if so, what video do you actually want? Comment down below. Let me know. As always, like, subscribe, hit the bell so you're notified. On top of that, also, if you want to call me directly, call me. The link is down below and schedule a call with me for free. Or send me a DM on Instagram at TommyBryson. Or on top of that, also, right here is another video. Watch it. It's about passive investing versus active investing in full. On top of that, look at my face right here and subscribe to other channels. See you guys tomorrow. And as always, peace.